All right, let's get the show on the road. It's 2 o'clock. Thank you, everybody, for being here. Leveraging market stats to boost your business series. For anybody that's new, we are streaming also on YouTube, LinkedIn, Facebook. If you're new to the program, we've been doing this for 5, 6 years. Basically, every single month we come here and we tell you the stats from South Florida real estate. And Miami Realtors, by the way, is the source of the source. We Miami Association Realtors owns the fourth largest MLS in the US and the largest association owned. And so these are our stats, and we're releasing to the media today. And so part of it is we bring on different Miami leaders on news release day to talk about the state of the market today and where it's going here. And you're going to learn a lot of tips, especially if you're a new realtor. A lot of great advice coming at you today. And today we have one of our best speakers. If you haven't been to one of our conferences, you should because she does an incredible presentation. She has an incredible website. I'm going to give you the her website and all that, but she is our market advisor. Anna, how you doing? How's everything today?
I'm doing great. Thank you so much for having me. And yeah, for anyone listening who's new, these monthly episodes are a tremendous resource. Chris does a great job, and the Miami story is super exciting, and it's unfolding in real time. So these are great information sessions.
Yeah, awesome. And I learn something all the time. Yeah, so Anna, so let's say there's new realtors listening for the very first time, and they say, "Oh, stats. I just want to sell homes. Why is it so important to know analytics, no data, no stats? How is that going to help me?"
Well, it'll help you speak to your clients because clients always have questions. And in our market, we have distinct segments. The segments of our market are not all behaving the same way. So it's really important that you can speak intelligently to the segment that is relevant to your client because everybody has questions. That's normal. And the general market, I'm sorry, the general media puts our market in one basket, but that is actually completely false. We have distinct segments, and the more educated you are and the more you know about the segments that you're catering to, the better you can advise your clients.
Yeah, excellent. Love it. Okay, all right. So let's get into it's going to be about an hour here. If you guys could stick with us, this is our agenda today. We're getting January 2026 stats, brand new today. Most importantly, boots on the ground. Anna is going to give you her perspectives. Like I said, we do this every single month. We already have our schedule for the whole year. We already have all of our leaders up until July. So you could go ahead and register on our website. But and make sure to look out for this. Our news release day is roughly, on the 16th or the 17th. And then, so now another question that I always get on this program here is, can I get this PowerPoint? Yes, you can. I will email to you. If you could write your email into the chat after, I'll just um, tabulate them all. If you're on Facebook or YouTube, go ahead and do the same thing. Put your email there. I'll send you this PowerPoint. You could use in your marketing, and we'll also send you the link if you want to review the recording. I'll get that to you. And so one of the main things I always want to say is if you could just write down one website or bookmark this, please, sfmarketintel.com. This is our source where we put all of our data, all of our videos, our stats, our infographics, our market focused videos, so much more on sfmarketintel.com. And it's not updated yet, but later this afternoon, you're going to have January 2026 stats, cities, counties, zip code, everything a little bit later this afternoon. Okay, so Anna, I wanted to get you some questions, but first I want to show the top indicators for the three counties. So Miami-Dade, a lot of positive stats here. You have 1 million up, condo sales up, single family home sales up for the fifth consecutive month. That's Miami-Dade, and here's Broward County. No surprise, 1 million and up, condo sales up. And here's Palm Beach County. Palm Beach County, 5 consecutive months of single family home sale increases. And look at the total home sales. Let me get back to Miami. So, Anna, another strong month. So I wanted to ask you, we're now in February. And we're seeing some, mortgage rates trending down. But I wanted to take it's good to have you here. Could you tell everybody, the state of the market today and then how you see the year playing out?
Great question. So I see this year in the next 5 years, to be very honest, playing out in the same pattern that we're seeing. So I love that we have here a separation with the condo and the single family because that is like partition number one to answer this question. So in the condo market, we have a differentiation in behavior from old product versus new product because of course we had that statewide law change requiring reserves, all those things, and we have a significant percentage of older inventory that has some challenges. They've had increases in HOAs, they have work coming, all these things that's put some pressure on that part of the market. This is why, especially for the condo market, it's very important to distinguish new versus old product. New product is easily filtered. There's the $1 million and up metric that you have here. And then there's also, I like to look at on a price per square foot basis, $1,000 per square foot and up. That kind of filters away older product. And when we look at those metrics that filter for new, we see that we're transacting at all-time highs, which shows that the people that are newly coming to our region are buying new product. And I see this trend continuing overwhelmingly for condos. For the single family space, there is less of a differentiation between new and old because, well, they don't have those challenges with the reserve requirements. And also, when it comes to single family, we can't add more inventory vertically. There's a finite number of lots. So at the lower price points of single family, we actually have an extreme squeeze because we can't replace them. And so I predict that this will continue. And then new product across the board, whether it's condos or single family, will continue to outperform. Actually, the higher up you go in price in our market, the more we're outperforming pre-COVID realities. I think that will continue because we're attracting wealth. And I think that the challenges we're seeing with older condo stock will continue, but the same reality does not exist for single family.
Yeah, excellent. I love that. The tale of two markets, the condos and the single family. Love it. Okay, great. All right, so we always got to talk about mortgage rates. That's is home sales, especially for most of the country, sensitive to mortgage rates, and you could see mortgage rates at this time last year it was around 7. So good news. It's around close to 6. Maybe it gets under 6. But Anna, when you look at mortgage rates. Um, South Florida is heavy, heavy cash. Can you tell everybody how heavy cash is it and how, that kind of shields us a little bit from the mortgage rates impact?
Yeah, so we had that in the infographic we had showing transaction volume increase in $1 million and up condos. Well, for the $1 million and up in condos was 70% all cash last year.
There you go.
And the higher up you go again, the more all cash it is. But $1 million and up for condos was 70% all cash. Past 2000 a foot, so really prime, it was about 84% all cash. So the higher up you go, the more it is all cash. But we have a heavy, heavy cash market. And that is the important differentiation in this cycle versus previous cycles. Any talk of bubble is easily refuted by that point. Bubbles are built with debt. And when the underlying assets can no longer sustain the debt, it kind of implodes like a house of cards. That is the opposite to the setup that we have right now. We have a heavy, heavy cash market.
Yeah, so it's like we have skin in the game. There's
Yes.
yeah, definitely. Okay, that's great. Okay, so let's talk about especially all the new Miami members, realtors that are joining us today. What makes Miami different from LA or Chicago? And there's a lot of different fundamentals. Let's just break it down. Number one, does does any other market have this type of ultra luxury sales?
The growth rate is what's interesting here
The
because
growth rate.
it's the growth rate. New York always had like is a more mature market, we'll call it, but they don't have this type of growth rate.
Mm,
And also, if we look at even higher up in this price point, we at past $30 million, we were at record transaction volume, and also past 3,000 a square foot. So it's the meteoric rise of a very, very high end. And what's very interesting here is that we're transacting now regularly, like as a regular event, we're transacting at price points that basically didn't exist before COVID. And that's all a reflection of the region's new stature in the global marketplace and the realities of the mobility of wealth, which is a huge, huge factor. So we're attracting wealth from domestic and international jurisdictions that are increasingly hostile to capital, such as, well, domestically, we have New York, we have California, we know what's happening in all those places. So those forces will keep sending the money to us. And that's what's reflected in this data that we have here on the screen.
yeah, I love it. Yeah, and you mentioned our we have a great chief economist, Gay Rortone, and she was sending me she was looking at 20 million and up condo sales. 2025, South Florida posted the most 20 million and up condo sales in its history, second most 10 million and up total home sales. So we have all those stats in our news release I'm putting out today. All right, Anna, I wanted to get this question here. Florida gains a taxpayer every 2 minutes. California loses a taxpayer every minute. Can you summarize the difference of the trajectories? This kind of hurts my heart because I'm born and raised in California, but can you talk about the two states and what trends are going in terms of real estate?
Yeah, so I've seen this report. We can add New York to this list. New York is mentioned in the same report that New York loses a taxpayer every like what was it 2 minutes and 8 or 10 seconds, and California was like every 1.4. Yeah, so New York is very much in the same boat. It was
Okay.
the same study here as California. So they're both hemorrhaging taxpayers, and the implications of this are really tremendous, and I feel underappreciated because in a high tax regime, your top 1% of payers account for almost 50% of your revenue. And so if you lose just 10% of them, what have you done? You've accelerated a death spiral in your state's budget. And that's what this means. Losing taxpayers for years and years is a death sentence when it comes to the revenue base of an area. And that's what's happening in both of these places. Of course, we know with the billionaire tax that's been in the news recently from California. In the wake of that, we've had all sorts of recent buying. The two Google guys have come, they both purchased compounds and houses. Their departure represents a loss of their accumulated net worth is $500 billion. Actually, since they announced that California billionaire tax, I think there's a study on this, 48 billionaires that we know of have left, taking with them over $1.1 trillion of wealth and over 16 billion in revenue from yearly taxation. So it's an abysmal failure, as we knew. You want to aggressively tax very wealthy people, they will leave. You don't need all of them to leave. You just need a percentage of them to leave, and you've accelerated the death loop of your budget. And that's what's happening in California. That's what's happening in New York. And these things are difficult to reverse. Momentum cycles build over time. So while they're feeding this death loop, we're on the receiving end of these people who are coming here with their money. So it's feeding our positive momentum, and it will keep feeding the upper echelons of our real estate market, which is why we're seeing these record transaction volumes for new and prime.
Yeah, wow, I love it. Amazing. 48 billionaires have left California. I'm going to look up that article. That is awesome. Interesting data. All right, so here's another thing that makes Miami unique, international migration, especially when you combine Miami and Broward. It is amazing the how the world loves Miami. And that's international migration. And then and I wanted to show you this one here. In terms of like the fundamentals, what makes Miami different from LA is you got to talk about our location. Location puts us, close to Latin America, and then we know that Latin America has had a lot of political upheaval. And this was a quote from Alicia Severa. She said, "When Latin American governments go left, the money goes north." And so that's something that Miami has that other cities in the U.S. don't, right? And that's a big
Yeah, we
factor.
can make the same quote now for American states.
Oh yeah, that's true.
Things happening.
Yes, that is true. Okay, great. And then so I wanted you mentioned the tech companies, and actually I saw an article today about I believe the company's called Palantir. It's
Yep,
a
it's Peter Thiel. So Peter Thiel's had a house here for a while, and that's his company. And Peter Thiel, interestingly, used to say years ago, I'm not making me, anyone can Google this, I'm not maligning Peter Thiel, he's a genius, but he used to say years ago something to the effect of like he would never take a company seriously if they were in Miami, he'd never come to Miami. And here he comes.
wow, look at that. Amazing. And then I want to ask you about Palm Beach. It's amazing the growth Palm Beach has made, 250 financial firms. Um, how has that become the Wall Street of the South?
Correct. So, well, West Palm, right? Stephen Ross has been very active over there. They've taken, there was an initiative that was in the news a week or two ago about Stephen Ross and who else was it? Ken Griffin contributing, I think it was $10 million towards some initiative to attract businesses to West Palm. So they've been huge advocates of that area. And then West Palm is following, it's shades, it's like all part of the same pattern, different flavor. If you look at the Palm Beach market statistics, the charts are the same shape as ours. It's very of Miami-Dade. It's following the same pattern, especially at the high end. It's just a question almost of preference. Do you prefer Palm Beach? Do you prefer Miami-Dade? Everyone has a preference, but the pattern of the markets are very, very similar. And then the story for Broward, which is kind of in the middle, Broward now has this emergence of prime product that's almost being forced into creation because new construction in Palm Beach and Miami-Dade have become so expensive, and there's been a population replacement phenomenon of people leaving Miami-Dade for Broward. So now Broward is kind kind of has this emerging luxury sector, but Palm Beach and Miami-Dade are very much following the same pattern for the migration of business and when it comes to the behavior of the upper end of the market.
Yeah, 100%. And I was just looking at that, the median sale price for Miami for single family homes, Miami and Palm Beach is exactly right on the nose, 700,000. So yeah, that is amazing. And then I also was looking at the chat, Ingrid Gilbert, I think she was in reference to how you said Peter Thiel
Yeah.
said he would never come, never say never. I love, thank you, Ingrid. Never say never. All right, the top feeder counties moving to Miami-Dade, of course, we talked about it. New York, LA, New York City. Um, yeah, for new realtors looking at this, I mean, how could they use this graphic? They, reach out to these, realtors in these areas and
Yeah, reach out to the realtors in the areas. Maybe also get well versed as to how our market differentiates from those markets. If people are coming from those areas, how can you explain why it's better what they're getting here, perhaps, how it's different, how it's better? And it can help to understand the perspective and the context of the people that are coming here. And also it helps in terms of your own personal network, targeting people in those areas, because I think these migrations will just keep coming. It's just started because again, for all the reasons that we've discussed, they're going to keep pushing capital out. So these feeder pools are not going to go away.
yeah, definitely. And we used to have this graphic in states, but now we have it in counties, so you could break it down specifically. These are who you need to target. All right, so let's have some fun here. Global trivia. Let's see who knows their Miami global trivia. So we recently, and I'll put it in the chat. We recently released our brand new global study, as you can see, released in January 2026. And these are some of the top questions. Three questions. If you could write in the chat, we'll see who gets it first. What is the top foreign country purchasing in South Florida? Now remember, this is brand new. The survey came out in January. Let's see who get it. How many countries purchased Miami new construction? This is our new construction study that we did. So it's a second one. How many countries purchased Miami new construction? And then number three, which is our favorite slide in the study every year from our CEO. She loves it. What percentage of global real estate sales happen in South Florida? So if you could write that in the chat, really appreciate it. I could see people writing this, so I really appreciate it. We'll see who gets that. All right, median sale price. Check this out. Here's Miami-Dade. And like I said, Miami-Dade single family almost touching 700,000. Wait until you get to Palm Beach, but here's the condo sales. Um, I know on this one, there was a lot of talk, especially last year with the new state regulations going into effect and how the condos were going to take a big impact.
We have not.
They have not, right?
Nope. So overall, yeah, the overall data shows they have not. On a case by case basis, there are buildings that are having challenges because now it's come to light that they have all these extra expenses and all these things. So there absolutely are segments of the market or individual buildings that are not doing great, that have trouble selling, that where owners are unfortunately facing extra costs, all these things. So that's very true. So there are definitely buildings that have been impacted and that are challenged. But the very, again, prime product is helping to drive all of this because, again, if we isolate past 1,000 a foot, we're at record transaction volume. And then it's well, even when it comes to the older stock, the ones, not every building was horribly mismanaged, right? Some were not. So the ones that were not horribly mismanaged are actually in a great position because they're selling well below replacement cost. So if you're coming to our market and you want to buy something new because of the cost of land, construction, all these things, there's nothing in the Tri-County pipeline under 1,000 a foot. It doesn't exist. Not in Broward, not anywhere. And in Miami, it's more. On the beach, it's more. It doesn't exist. So whenever you see something new construction starting at 450,000, those are studios and condo hotels. So anybody who wants to buy a two-bedroom, let's say I'm making it up, and they have to spend under $500,000, they have to buy an older building. It is impossible to build at that price again. So the older buildings that have not been horribly mismanaged are actually in a good position because they're well below replacement cost. And they're never going to have competition again at that price point. So.
Yeah, excellent. Okay. Taking a look at the chat, Alex Aranza asked, are you going to show stats for Broward and Palm Beach? Yes, coming up right now. And then also thank you. I'm going to give it away right now. Maria Villalobos, she got it correct. Colombia's number one. Yes. How many? I want to see the number two question. There was a guess here for 12 countries. How many countries purchased Miami new construction? It's a lot more than that. But yes. So that's, and here you go, Alex. Here's, well, first I have the Miami-Dade Condo Special Assessment Program. This is loans closed already for Miami-Dade residents. This is something realtors should know more about, and it's actually paused right now, but they're gonna restart that. And then, so Alex, yes, we got the Broward, and we're gonna show you as we continue. We got Broward and Palm Beach as well. And so slight decreases there for median sale prices. But this is what I'm gonna say. Yeah, exactly what you were saying. Look, 700,000 and almost right on the nose, Miami is 699,990. So yeah, those two markets are amazing. Okay, all right, so let's take a look at historically going all the way back to 1996, and you could see this graphic. Um, they goes up and went down. Definitely, they had the 2008 um, uh, issue there, and then it went up and again as it continues. But Anna, when you take a look at this graphic, what is the first thing that comes to your mind in terms of Miami real estate?
I mean, it's a pretty clear trajectory up. It bounced off that,
Yeah,
and now we're sort of being fueled by these new post-COVID forces. So there's a ways to go.
there's a ways to go. Yes. And then so we have it for Broward as well, and you could see the since 2008 prices have increased 122% single family, 85% for condos. We have it for Palm Beach here as well. So again, you're gonna if you write down your email into the chat, I will send you this PowerPoint, and you'll have the time to go through this. And then we also want to talk about our active listings. They're still below the historical average, and you can see right there, we just got this graphic updated. But and what's interesting, we're going to see in the data is inventory is starting to trend down.
It is actually, that's correct. Yep, across the board. Yep.
Yeah, why would you say that, or the reasoning behind that, or
Um, Good question. So it's hard to give a blanket answer because some segments of the market have seen upticks year over year in transaction volume, and maybe just the inventory hasn't kept up. Maybe people are just not wanting to sell as much also.
yeah,
It's a bunch of factors coming together. Um, and the size of our what's free floating in our pipeline is also overestimated because the majority of the pipeline has already sold. So we actually we have the opposite of an oversupply. It's also why I keep saying what I keep saying is that active listings are below pre-COVID across the board. And then when you segment by price ranges, some segments are far below pre-COVID and some sub-markets are far below pre-COVID. So for example, Coral Gables, single family home listings without any segmentation are almost 50% below pre-COVID.
wow, in Coral Gables. Hmm, interesting. Okay. All right. So let's move along here. How many square meters of prime property in these major cities? And you can see Miami, you get a lot more bang for your buck.
This
And
is a
this is,
really great chart. Yeah, because it
yes,
shows that how we compare to these other global cities. And one of the things that I keep talking about, we all keep talking about, is the international buyer, right? So what is fueling that? Wealth migration is going to be a main characteristic of the 21st century. There are organizations that publish this. There's a great chart that I included in something that shows that the mobility, so high net worth people changing their address in a given year is trending up. It was at all-time highs last year. It's been trending up since COVID. It's expected to reach a new all-time high this year. And why is that? Because technology enables people with resources to move. And that isn't going to go away. It's not going backwards. COVID was this like accelerator of our adoption of the internet around our way of life. And so if we believe that, if we see, which it will be, that wealth mobility is going to be a main trend of the 21st century, and we see these various regimes, both domestic and international, increasing hostilities to capital, it stands to reason that the money is going to keep flowing out of those jurisdictions. And we become one of the places that's receiving it. And then within that context, it's important to recognize that the people who are coming from these other places are used to paying more. So it is a little bit shocking from an internal perspective because the prices here have risen quite dramatically in the last 5, 6 years. So someone who's just from here might say, wow, it's gotten so high. But if you're coming from a different perspective, they're actually not that high on a global level. And this is also why we see this really pertains most to the new and prime product. So now we're seeing new construction, new condo construction hitting the market at 4,000 a foot and 5,000 a foot. And it's selling because the buyers are coming from places where they're accustomed to paying these prices.
wow. That is great. And I just finished reading an article. I believe he's works for the White House. I think he's called the AI czar. His last name is Sachs. He was talking about how Miami is going to replace New York City as a finance capital.
Yeah.
Um,
It could. Absolutely. Momentum cycles are very, very real. And we have Mamdani quoting the Communist Manifesto and California wanting to tax unrealized gains. The Netherlands is a country, they're doing the same thing. The Netherlands on February 13th passed a law that will go into effect in 2028, taxing unrealized capital gains at 36%. What do they think is going to happen? People are going to leave.
wow, look at that, Netherlands. Okay, so that's a country to keep an eye on for our next global study.
Yeah, let's see what happens there. Correct.
Netherlands. That's excellent. All right, and so this you already answered this question,
Yep.
but it's 2008. Is 2008 going to happen again? And but you've answered it already. But any other thoughts on this and how it's a lot different, different story?
It's completely different. The main fundamental difference is that that market back then was built on debt. We all know this. It was speculative debt. I mean, there was movies created about it. It was a huge bubble built on debt, liar loans, all that stuff. And this is the complete opposite to the setup that we have right now. The complete opposite. So we have a setup where we have heavy, heavy cash buying. We also have very high levels of home equity ownership in Miami-Dade County. I've seen studies in that. And then also, while we've had this increase in pricing that's again driven by cash, but it's also important to note that, as one of your slides showed, our inventory levels are below pre-COVID. So we have not had a spike in inventory levels that would also be potentially alarmist. So we have inventory levels below pre-COVID, and we have extremely high all cash usage. So this is not a bubble setup by any stretch.
Yeah, you have some great sound bites. I love it. Increase in prices driven by cash.
Mhm.
That's a great way to put it.
Yeah, as opposed to debt, which is what it was last time. This
Yeah.
setup
Yes.
completely different.
Different. Yes. All right, closed sales. These are brand new stats we're releasing to the media, but you're getting it first. Miami-Dade total home sales are up 1%. And you could take a look at single family condos, essentially even down. I think last year at this time it was 733, so it's just down one sale. Here's Broward County, in Palm Beach. But very interesting, especially what's happening in Palm Beach. Single family continues up 10% year over year. We've talked about that already. Amazing. Okay, so let's try to give some tips to realtors members on watching online on this call. This is a great way to find out what's happening in the last 7 days. If you're not using it, Market Watch on Matrix. That's just one of our tools. And then we have some more tools. We have IMAP, we have SunStats, we have zip code reports, monthly zip code reports that you will find on sfmarketintel.com. We have RPR. Um, and Anna, on IMAP, do you use IMAP or familiar?
Hey, Sam.
Yeah. How can members use this to make more deals or get more data?
Okay, good question. So IMAP basically lets you export data based upon a very, like, you could basically enter in any type of criteria you want. There's addresses, closing dates, all these things. So whatever your criteria are, it lets you export those numbers. Um, I use it really to sort of, because it pulls from tax records. And so I believe, right? So I use it really to further corroborate what I see in the upper end of the market. Because I don't want to miss sales that everything is usually in the MLS, but at the very high end, there's so few transactions that I always double check it. So I use a few sources. It's very good if you want to, for example, farm a building or an area. It can show you, you can export addresses of owners. You could do all sorts of things with it. So, I mean, it's hard for me to give a one kind of answer, but it's a really great way. Whatever your details you're looking for, it's so flexible and powerful. You could export based upon on those details. So I just encourage everyone to go play with it, familiarize themselves with it, and then I think your brain will start to figure out what is of value for you there.
Okay, excellent. Yes, I love it. Thank you for that. That's going to help people. And so we have RPR. It's another free. These are all free Miami member tools. It comes with your membership. You could access data there. And then we have SunStats, which is one of my favorites. And you could create data essentially in seconds. And Anna, you're going to love this. This was a brand new thing that just happened this month. is that SunStats added more price ranges. So now we have data on 1 million to 1.249. And you can see the bottom there, how it breaks down, because before it was just 1 million and up. And so now we have these little breakdowns all the way going. Now we can see 10 million and up. So, I mean, we needed that for this market.
Yeah, we really did. Yep, exactly.
Yeah. Okay, great. So that's SunStats. And then so let's go into dollar volume. This always amazes me. January, is not historically, that's not a big real estate month. Not one of our bigger months, but still you have 1.6 billion in Miami-Dade, 1 billion in Broward. And look at Palm Beach, 1.9 billion. That's a larger market than Dade. But this really speaks to the power of the industry that we're in.
Yep. And the number of sales at the very high end, which are also boosting up these numbers.
Yeah, okay.
We've seen these $100 million price points now, $50 million things. All this adds to that bottom line.
Yeah. Okay, great. Okay, so that's dollar volume, brand new stats, months of supply. Again, when you guys, I'm going to email this presentation to you so you have more time. But basically, what we want to see is 6 to 9 months as a balanced market. Less is a seller's, and more than 9 is a buyer's market. And it depends, whatever market that you're choosing. And so here's really what you should be doing for the neighborhood that you're farming. And that's the calculation on how to do it. So Miami-Dade months of supply overall, all properties 9.8 months. So balanced market 6 to 9. So it's like on the end of the balanced market. And single families at 6.4, condos 13.7, buyers market. I don't know, when you look at the condos 13.7 months, um, it's a buyer's market, but historically the condos have been a little bit on more months, right, than single family. So what's your view on that?
Again, especially for this type of number, months of inventory, you really need to segment down to what your client needs because there's a huge range. So for the condo market, there's going to be a huge range for price, for age of product, for all of those things. And that number is being pulled down by older properties that aren't selling for one. And then also it's pulled up by super prime, which takes longer to sell, and that's fine because super prime always takes longer to sell. So you really need to drill down to the particular segment that you're looking at and the particular building. For single family, I'll also point out that 6.4 is excellent overall, but it gets even like more extreme when you dig into the market at lower price points, like under half a million. We're at 4 months or 3 months. It goes like this. So for single family, the ranges at the lower you go in price, the faster the fewer months of inventory. And for the condo market, it's less of a simple answer because we do have those challenges with the older stock. So I would just say to dig into the segment that's relevant.
Yes. Okay.
And there's big variation. That's why, because there's huge differences in price and type of product.
Yes, yeah, it makes me think of I think it was Eddie Blanco. He told me he always gets a question, how's the market? And he says,
One.
which one?
Exactly.
Yeah, it was,
Yeah,
which
same
one?
thing. Exactly.
What are you talking about? Which okay, so here's Broward months of supply 8.2 overall. Seller's market for single family. And here's Palm Beach. Okay, so these are the new stats, the new price tiers that we have with SunStats is that you could see we have 10 million up, and you have breakdown from 5 million to 10 million. And so it's interesting. These are months of supply, and it's just more data to look at, and that's in SunStats. But exactly what Anna was saying is that you have to look at your neighborhood. These are county-wide stats. Okay, and so now we move into hot markets. These are the hottest cities, communities, in terms of the lowest months of supply. Look at Kendall, 3.6. But any of these, you mentioned Coral Gables earlier, but any of these that you want to talk about?
Yeah, so Coral Gables is the interesting kind of like one is not like the others because Coral Gables is a luxury market, the others are not. And Coral Gables is a great example of a market that is at higher price points, but so close to the urban core, where of course we're seeing all this new office delivered, all these things, it's close to schools, all of that. So even though Coral Gables transacts at higher price points, it's behaving like it's not. It's at these very low absorption levels. The other ones, for example, single family, Cutler Bay is further down south. Hialeah. These are markets that are getting pushed up because everything around them got very expensive, and they still represent some type of access at not extremely high price points. Coral Gables is the one that's not like the others. List. It's just Coral Gables is such a tight end user market, despite being at higher price points.
Okay, great. I love it. Yeah, I was just answering a question there. Um,
Like
thank
the
you
median
all for
price for a
listening.
single family home in Coral Gables is about $2 million.
What was that? The median
Median
or
price for a single family home in Coral Gables is about $2 million.
wow,
And it's still transacting that quickly. That's what I mean. Yeah.
that's impressive. Okay, so that's Miami-Dade, and here's a look at the cities, hottest cities in Broward County. And again, this graphic, well, you'll have it in the PowerPoint when you get it, but it's also on sfmarketintel.com. And that's Broward. And here's Palm Beach, the hottest cities with the lowest months of supply. Jupiter number one, single family, and Palm Beach Gardens for condos. Okay, active inventory. This is interesting here. Take a look at the chart on the right, and that just includes December. We have to get January into there, but you could see that exactly what we're talking about. We're seeing that trend going down. And Broward year over year is down. The inventory and Palm Beach is also down. So this is interesting because, for the last year plus, we've seen inventory creeping up, especially on the condo side. But this is interesting now that it's something we got to keep our eye on that inventory is trending down. Now, Anna, could this be because of seasonality? I know January is a lower
No,
transaction month.
it's an overall trend that I've seen for a bit. It could be any number of things. People are less likely to sell for various reasons. Um, the market stabilizing because there was a bit of a surge on all fronts post-COVID, and the market could now be stabilizing around new realities. I think it's healthy. I think it's the market finding new footing because we had really rapid price increases, which of course the slope of which was not sustainable. We had really rapid rental price increase, all these things. So that was sort of the offshoot post this cataclysmic event that we had. So now I think this is part of the market normalizing, the overall market normalizing. Certain segments are again behaving differently, but the overall market stabilizing around like a new levels, like a new normal.
Yeah, I like that. It's healthy. The market is normalizing, stabling to new levels, the new normal. That's great. I wrote that down. And then so there's a question. Ingrid, thank you for the question. She asked about the 7-day tool. Yes, you're referring to the Market Watch, and that's on Matrix. So it's in your MLS. You got to click on, I believe it's on the left, Market Watch, and then so you have to set it up. You put in your communities that you want to track. But and our trainers do a great job um, of doing classes on Matrix, and so yeah, that's a game changer for you. Um, Market Watch. Okay, so let's recap what we talked about so far. Active listings is interesting in the data. It's not growing as fast as before. Could we get sub 6% rates? That would be incredible for Miami. Pending sales are also up again, so we might be here next month talking about increase in sales. All right, global trivia. So we already know who won because it's Colombia. Colombia was a top foreign country purchasing in South Florida, 15%. Somebody guessed Argentina, so not far off. So thank you. Yes, Colombia. And I want to see who was that again? That was well, there's a couple. Maria, great job. Colombia number one. And also Juan Suarez at Colombia. Very good. Yes. And Argentina's right there too. A couple people said Argentina. So yes, Colombia's number one. Remember that. Top foreign country. Now, what are how many countries purchased Miami new construction? 73. 73. This is something that you guys could use into your marketing. Um, I don't think there's any other market that could say that they sell to 73 countries. And so this is a graphic that we put together. That's from our design department. And then the last question is, what percentage of Florida global real estates happen in South Florida? This one, our CEO loves it, 45%. Um, Yeah, and Anna, look at the difference between Miami and Orlando. You would think Orlando would be a little bit higher, but th that really shows you the separation.
Yeah, it's a huge separation. This is a point that I make to the press also is that we see a lot of articles saying Florida this, Florida that, and then they use a picture of Miami, sort of the clickbait, and they try to conflate our reality with that of the rest of the state of Florida. And this kind of illustrates very clearly why we can't do that. And the analogy that I make is that when people discuss Manhattan real estate, they never put it in the same sentence as Buffalo or Albany or Rochester. And it's simply put because those are international cities and there are different demand forces at play.
Ah, there you go. Just looking at the chat, thank you, Matthew. How about the time of the year and buyers not wanting to pay the prices sellers want, and therefore sellers are taking the home off the market rather than lower the price? Yeah, that could be happening. Thank you for that. And then Freddie asked about the global companies. Can I see it again? I'm going to email this. Freddie, put your email into the chat, and you will have the PowerPoint, and you can see all those companies. All right, tools and resources. So we have this is SunStats, and we said that it's new and improved. So even more reason to use it if you're not using SunStats. That's a free tool, and we have free co-branding marketing materials for members on myrealtors.com/co-branding. All you have to do is put your company logo or your information there. 20 reasons to buy. There's 20 reasons to buy in Miami, 20 reasons to buy in Broward, etc. We have all three counties. And then we have Miami Photify, which is free to Miami members. We have more than 1,000 templates. As you can see, these members are just adding their picture and their logo, company logo. These are free templates. I mean, we did the work for you. All you have to do is push a couple buttons and you get that. And then we have our market reports, which you'll see on sfmarketintel.com later this afternoon. We have so much stuff on social media, infographics, market reports. You're going to see that on social. We have zip code reports. I have quarterly there, but now it's monthly. I need to change that. It's we have that monthly because of our incredible chief economist, Gay Corratone. We have RPR, it's free. This was the trainers. There was a question there on Market Watch. These people right here, send an email to them. They will help you. That's what they do. They put on classes. What else? All right. So getting to the end here, Anna. So this is cross market demand. Is which um, markets are looking at Miami listings. This is from Realtor.com. No surprise, New York, number one. Then we have Atlanta, and then number three, Chicago. Um,
Texas,
but first, yeah, what was your take on this?
it's interesting that Texas is there. That's the only one that's not a high tax state.
Oh, okay.
That's
Texas.
interesting because
Yeah.
we Texas and Florida have led the pack sort of for interstate migration since COVID. And it's interesting to see Dallas County as number six looking at us. I was actually asked it by Realtor.com my thoughts on this today. Okay, I was gonna the article will come out tomorrow on this topic.
Oh, really?
Yeah, yeah, yeah. And that we're seeing Texas now as part of the job migration to Florida. They asked me what I thought about that. And it's interesting that to me, because obviously then it's not just for taxes. Not that any of it's just for taxes, because we always had a tax advantage. It's more than taxes, but it's extra interesting when we see people from Texas coming. And that to me signals that we've become not just a tax magnet and lifestyle magnet, but also that we're attracting people for purposes of their careers. I think that's why they're coming. And also, we've been getting many more big headline movers coming here than Texas has. So I think that has increased the aura and the spotlight on Miami. We get all sorts of headlines about the various high profile billionaires moving here, the offices moving here, the banks moving here. And I think that might be part of why we're seeing people from Texas looking at us now. Hmm.
Wow, super interesting. I'm gonna look up that article tomorrow. Wow. So and a lot of times, maybe that was was there a headquarter company that chose to move from Texas to Miami?
The top of my head, I don't know. I don't know which one it would be.
Yeah.
I think it's just all part of the general trend.
The general trend, yeah. And then the other, when I'm looking at these markets here for the first time, I've been doing this for 5 or 6 years, but of course I've seen LA, but Santa Clara County, I think one of, or they, I haven't seen them on the list for a long time, but now they're number nine. So that's interesting. Santa Clara. Okay, great. So you guys have these, the couple it with the one at the top of the presentation where we talk about top feeder countries and the counties, and then this is more data right there. All right, great. So we made it to the end. Thank you, Anna. She is amazing. Thank you so much for your time and what you do for us, especially speaking to Realtor.com for that article. But any other takeaways that you wanted to tell people here?
Just that this is going to continue. I think it's like a 20-year cycle. We're in year five, and it's important to recognize that the forces that are pushing people to us have just begun to grow. They're not going to reverse. For our reality here to reverse or change, we would have to see a net exodus, an outflow of taxpayers back to high tax states. And I think it's pretty clear we're going to keep seeing the opposite of that because they're doubling down on their policies that are hostile to capital. So it's just they're going to keep feeding their negative doom loop, unfortunately for them. And I grew up in New York City. I get no joy in saying this. Like, it's almost tragic. Like I've been saying this for years. They're gonna keep doing it, and they keep doing it, and I get very little joy in being right. It's like a slow-moving car accident. It's like, but they're going to keep doing it, and then we're gonna continue to be on the receiving end. And also, why I like those international buyer stats so much, it's not just domestic, it's international, and global wealth mobility is going to be a key feature of the century, and we're positioned to keep receiving it. So this is just going to continue.
I love it. You're amazing. You're one of the first ones that talked about this topic. I remember Long Miami.
I was saying it
Um,
years ago. Hostilities to capital will keep increasing, and look at what's happening. Again, I'm like, I get no joy in it, but it's happening.
Yeah, it's amazing. Well, phenomenal job. And please follow her on Instagram. Go to her website, analytics.miami. She does an amazing job. And once again, thank you, Anna, for everything that you do for the association. Um, we are indebted to you. And thank you all for everybody for joining us today.
All right.
And
Thank
we'll
you so
and
much. Thank you.
I will
We're all
get you
lucky to
this.
be here. So.
Yeah, for sure. We'll see you next time. Thank you.